Stocks, they cite the challenging economy. Among the names, Teradyne downgraded to neutral. That's from buy. The price target goes to 127 from 149. Jenny, you own that.
Right. And we actually agree with this call on Goldman. They're saying that semiconductors sales are cyclical, and that's 100% true. With respect to Teradyne, we think that's already priced into the stock. So you've got it down 26% year to date. It's trading at 18 times 23 earnings. 23 earnings should grow at about 9%. We've owned this stock since 2013 at $16 a share. We actually trimmed it like a year and change ago at 140. Added to it 6 months ago, exactly where it is now, 121. This is a really long-term holding with unbelievable long-term growth prospects. And just like with the broader market, we're willing to roll with the cycle. So, sometimes you'll have a recession, sometimes you'll have an expansion. That's true for the market and for stocks. We're fine with our Teradyne holding.
Okay, so let's talk about AMD. Removed by Goldman Sachs from the conviction buy list. They still have it as a buy, so keep that in mind. The price target to 127 from 159. Joe, you bought AMD, so you are putting some money into the market. You own AMD in the Joe T. This is in your personal portfolio, is that right?
Correct. So we already knew that the comps were going to be challenging for AMD as we move through 2022, and that's really what is highlighted in this note. What I find in my portfolio is that through the last several weeks, I really have not been going out and buying a lot of technology companies. I haven't been very active in some of the more higher valuation companies. So wanting to be respectful of that, I did have AMD, and I also have Amazon on my list as well, of names that I wanted to add to. And I felt as though in the last several days you saw a tremendous opportunity to get into a reasonably valued growth technology stock. And I think the expectations have been reset. We're understanding of that. And I think there's upside potential as we move forward over the coming quarters. So I began to build personally a position. I will add further to that position on declines in AMD, but I'm comfortable owning both NVIDIA and AMD. I think that's the right cyclical exposure.
Okay. Steve Weiss, I see that you sold the semis, which I'm going to ask you to tell our viewers why. I was literally just handed a note from JP Morgan's Marko Kolanovic. We cite him a lot. He publishes a lot at this time. You talk, I'm going to read, and then I'm going to give you the highlights of what Marko just dropped on the market. Go ahead.
Okay, so
all right.
So I bought the SMH to get exposure to the market, and that's how I've been doing it, with the SMH or the Qs or some other ETF, because my net exposure is low. So when I feel the market tactically is going to move, I don't do it often because it's very difficult to predict market moves. When you see massive momentum, as you did last week, I bought the SMH. I sold part of it, a good part of it, at a nice profit. I sold the remainder at a loss. As you may recall, I sold Qorvo and Skyworks a couple of weeks ago because discretionary spending, in my view, which includes the iPhone, is going to decline. And in the press today, we saw speculation that Apple has cut their production by 20%. Skyworks, 50% of their business comes from Apple, so it will impact them. Qorvo's also in the iPhone. So that's why I sold. So there's certain areas that are cyclical, very cyclical, and there are certain areas that, like ON Semi, which is my sole remaining semiconductor, said they're sold out for the year. So that's why I'm comfortable owning ON and why I sold the others. Okay. I'll be back. They're all high-quality companies.
All right. Well, let me put this into context here, Marko Kolanovic. We have read to you on numerous occasions how Marko has put out notes at some of the darkest times in the market and suggested that the market's too negative, that too much negativity was built into the market and that you should buy the dip. And then even if interest rates had risen up to a specific level, it wasn't necessarily a blow to stocks. Now Marko Kolanovic is out with a note that says Fed rhetoric and yield curve becoming concerning, but a near-term recession, he says, is unlikely. Though we expect higher yields given strong inflation in labor markets, we remain tactically neutral, awaiting a better entry point. So that's Marko Kolanovic. And it goes to the point that I was making, I think, with Jenny, you a little bit earlier, is the better entry point. And the fact that you've run so far, so fast from the lows that buyers at some point may dry up because they deem what Marko sees in some respect. It's not a great entry point after as far as we've come. Is there something to that?
Well, I think it gets back to the definition of bullish, where he says we're kind of neutral. And after the run that we've had for the past decade, kind of neutral sounds pretty good to me. I think there is something to that. And it is your point exactly that you were making with me before. Like, there are better entry points. I'm not sure that there will be a broad market better entry point. And this gets back to what you were talking about with Jonathan Krinsky. What if there's not a whoosh down? And you know what? I'd argue that there won't be a broad market whoosh down, because I think that $15 trillion of individual cash, the corporate cash, the resilience of those FANG stocks, which, by the way, they are down on the year, but they're not down that much. I think all of that creates this floor. So I don't think we have a broad market whoosh. I don't think you wait broadly for a big entry point. But I think this dislocation that we're seeing between sectors, within sectors, between stocks, you're going to get your points of entry. So you just need to be really patient and really strategic and tactical this year.
I'm not suggesting either, Steve, that Marco is all of a sudden sounding any kind of alarm. This doesn't appear to be a negative note, and certainly the tone doesn't appear to be that way either. It's just at some point, if you keep telling people to add on weakness, maybe at some point the entry point becomes less attractive, and perhaps after we hit 4550 on the S&P, considering where we were, it just becomes a less attractive place to start adding more risk.
Yeah, I agree with that. And, if I recall, Marco a few weeks ago was very bullish with the market at this level. So what's changed in his note is that he's focused on the Fed, he's focused on the yield curve. And if I took issue with what Jenny said, I would say that the cash levels in the household hasn't changed much since the market and individual stocks were 50% higher than they are now. So I wouldn't count that coming in from the sideline, again, to your point, Scott, with how the market has bounced. The indices, lots of stocks are still at their lows or not far off. So there could be opportunities. My bet is that you get the opportunity on another decline in individual stocks.
And you do continue to have this debate as to whether bonds are now more attractive than stocks. People have made that, at least over the last couple of weeks, and maybe this sort of plays into a little bit of that narrative too, as we have that kind of a debate. Jenny, I know you want to say something. I'm afraid you can't. I'm sorry. I have to take a quick break. We're going to come back in a second. I'm going to tell you about the ETFs you need to watch. We're back right after this.